Hello, Mati Trader, and welcome to the blind analysis for the week. This is where we look for buy and sell opportunities blindly from the markets. So I'm going to be looking at the JSE today and looking at the stocks. I didn't look at the market yesterday because I was away. So let's take a look and see what we have lining up for us this week and also this month. So this is where you can see I'm using Velocity Trader to be doing the analysis for the week. And we will start with ALSI Group. Right, so as you know, I've been a little bit hesitant with banks. They've been moving sideways and they just haven't been presenting opportunities well for Mati Trader. But there is something that is interesting that's been lining up, and that is a descending triangle. So as you can see, it's been forming lower highs and it's been forming the same lows. So what happens is if this breaks below 118, we can get some downside for the banks, but we're going to have to wait and see if that comes into fruition. Then we have Anglo American. Anglo American is doing very well with our trade. As you can see, we got in around this level and now we are at 680, and I even think it's time to move our stop loss up. So I'm taking my pen and paper and I'm writing down Anglo, we need to move our stop loss to secure profits. Next we have is Anglo Gold. Now gold is on another tangent. I mean, it's just been coming down for the last couple of months, as you can see here on the bigger aspect, that we have had this downside since my birthday, 22nd of July. So what we're seeing now is that it needs to test this very important support level and it needs to hold. If it breaks below, then unfortunately we could be seeing a lot of downside for Anglo Gold. In fact, it could even go down to 100 Rand. But we'll take advantage, obviously, if it breaks below here. That would be a potential sell opportunity, which I'll write down right now. Anglo soon too short. That's as long as it breaks below the support. Now let's move to a pharmaceutical company, Aspen. Aspen has been doing phenomenally well. I think with the vaccination rollout taking place and with South Africa becoming more confident within the rollout, with having over 60-year-olds and healthcare and essential workers getting their vaccines, I think Aspen has been on an upward trajectory based on the fact that people are finding hope within the vaccination, which will obviously be good for the economy and for stocks. So if it comes back down around this level at 155, we will be going long, or we might be going long right here. Who knows? I'm going to have to decide, but it definitely looks like it's going to go up. So I was going to write buy APN, and the reason is an ascending triangle. So the ascending triangle is high lows bouncing on the same level of highs since June 19th of June, and now that it's broken out to the upside, we can most definitely get upward demand and a trajectory. BHP, another resource stock which looks like it's on its way back up, and it's taken its damn long time because since March I've been waiting for a break to the upside, which took place here in April, and now we are moving up on this uptrend and it's even accelerating. So normally when it catapults, it means that there is going to be some sideways movement. It's going to be testing these levels, and then at around here, which will be June, we might be going long BHP Billiton. But you never know. If it breaks above here at 480, then that will be another long signal based on a rounding bottom formation. Bidvest is looking horrible. I'm sorry. It's moved sideways. It hits a high, it goes down. It moves into this diamond formation, and right now this is a no-go zone for the Mati Trader. Same with Bidvest, sideways movement. It's forming what's known as a diamond formation. So it needs to break out of the diamond formation before we even think about going long or short. So if I draw it like this, and you know the diamond formation is really used because not many people know about it. But basically, it's another formation that I like looking at. So if it breaks below 165, we'll go short. If it breaks above 175, we will go long. Richemont, you know, this is one of those stocks that works very well for trend traders. They basically get on when it breaks out of a sideways movement, and they just keep holding on until it breaks a certain level. So sometimes they overlay moving averages, and if it breaks below moving average, they go short, or if the moving averages crosses, they carry on holding. So this isn't really a breakout trader formation, but this is definitely good for trend traders. Clicks, another diamond formation, which is why I avoid these stocks, even though it looks like a W formation is formed over here. If you look at the bigger picture, it does make a high, but then it comes back down, and it's something similar to what MTN has done for many years. And for me, this is a no-go zone. Same with Discovery, diamond formation. It looks like the diamonds are overruling the JSE. They should bring back the diamond stocks. De Beers and all that. I don't know why they stopped listing them. Diamond formation for First Rand. Then we have Growth Point, which has come back to our entry level. And now I'm going to be waiting for a bounce before we get some upside movement. Kumba looks good. It's got an inverse head and shoulders. It's come down. It's tested it. So watch this. We might just have a new trade. And it's based on an inverse head and shoulders. Mediclinic is doing the opposite to Aspen. It has formed this gap, which means that we do not trade. Mr. Price. Mr. Price is also looking good for trend traders, not really breakout traders. And the reason is because it forms what's known as a rising channel. And the rising channel is what trend traders love to use for holding on to trades. And you can kind of say that it's formed what I call a Vuvuzela formation, or the megaphone formation. And that is basically, it's going to come down, test it, and then it'll move back to the latest highs, which will be at around, let's see, at about 217. Nedbank, the same for trend traders. Nothing I see for Mati. Netcare, similar to Mediclinic, on its downward trajectory. You can say that it's forming what's called a symmetrical triangle. And a symmetrical triangle is different to a wedge and a pennant in a way that it forms a triangle in the middle. So it doesn't slant down, it doesn't slant up, it actually slants to the horizontal side. And then if it breaks to the downside, we go short, and if it breaks to the upside, we go long. So I'm hoping that based on the previous uptrend and the breakout to the downtrend, which basically moved up, we should get a breakout up here at 15 Rand. So I'm going to write that down and say Netcare buy at 15 Rand. Old Mutual, also, it seems to be forming a symmetrical triangle, and it needs to break to the upside at around 13 Rand 50 for us to go long. However, I don't like what I'm seeing on the broader scheme of things, and that is this sideways movement that it might break up and then it'll just carry on down as it's been doing. So the nice thing to do with when you have stocks in your watch list that you constantly look at is that the stock develops its own form of personality. And you must take this into account because you'll know what to watch out for and when to trade and when not to trade. Remgrow, this doesn't work with multi-trader, especially these short-term, this low volatility type movement to the sideways trend with this gap is also disconcerting, and now it's breaking down to the downside. There isn't really a lot of profit when it comes to these type of stocks. We needed to break up and actually rally at a high level, because we are not investors. Look at this, from June all the way through to May. Look at the price difference, or the range between the high and the low. It's not really good enough for us to hold long term, medium term. Okay, next, SAPI. SAPI has broken its uptrend officially. As you can see, it broke its uptrend and now it's on the way down. I didn't see a formation according to the multi-trader. What you can consider is that this is a W formation and it's broken down, so technically we should be going short. So this might be a good hedge that we can use as traders. We can use as traders to short. So I will write down SAPI potential short, and that's if things turn down for the JSE. Standard Bank is doing something similar to First Rand, where it's forming a type of diamond formation, but it's more along the volatile range of the previous way it's been moving over the last year. So this means that I will not be looking at Standard Bank at any time soon. ShopRite. ShopRite is one of the stocks that you can see our stop loss is around here and our take profit is way up there. So we're just going to hold on and see what happens. It is holding the uptrend, which is the most important thing. If it can keep holding this uptrend, we have good hope that it can bounce around this level and then it will rally. Sanlam is sideways. You can actually see it as a box formation in a way. So if I do a rectangle, this is the rectangle that we're looking at. It needs to break out of this rectangle before we consider doing anything with it. Sasol, another stock that is doing super well in our portfolio, and they took out my take profit level. All right, these are things you got to watch out for with your trading programs, is that sometimes your stop loss and take profit level is taken out of the market. I need to redo the calculations, but we are high up in the money, and we're going to keep on holding as long as this beautiful uptrend holds. We have hope, and I might even move the stop loss where we'll bank an inevitable profit. But you see, these type of candles, if I zoom in here, these are testing candles to see if there is supply and selling around these levels before it moves up. And this is showing a positive sign. So keep on holding. I'm happy with Sasol. I need to put my take profit level back in. Sometimes it happens, these glitches. SPAR, sideways, not even worth looking at. Tiger Brands, sideways, not even worth looking at. See how quickly it is to analyze these stocks when you get used to the feel of how it works with the multi-trader system. The Fashini Group's good for trend traders, but not really breakout traders. So if you're following, for example, this rising channel, and you just keep on holding as long as the channel holds, well, you will keep making profits. True Words, sideways. We can actually consider this a box formation as well. So if it breaks above it, we might have our entry point at around 52 Rand 36. Looks pretty good. The Rand. Well, the Rand is doing exactly as I said. I even predicted that it's going to head its way down to 10 Rand. And that's just based on the momentum as well as a number of fundamental factors. But most importantly, the charts. It broke out of this crucial level at 14 Rand 40, which means that the Rand can continue strengthening down to 11 Rand or even 10 Rand. What a pleasure, especially now that I'm in Greece. Vodacom, I keep it on my watch list, but it is useless to trade with the multi-trader. It can break out of these formations and it just comes back down. And it has a similar formation to MTN. It's funny. So telecommunication, MTN, Vodacom, those stocks just don't work for the multi-trader anymore. So I might even put it in my shit list. Woolworths, and you see we're still quite away from our stop loss, but doing another analysis saying that we need to hold this level in order for the price to continue to the upside. So I'm feeling a little bit hesitant with Woolworths, but we have other opportunities coming our way. Hope you enjoyed the blind analysis. And if you did enjoy, please give me the thumbs up, send a comment, tell me what else you would like analyzed. If you want to see more blind analysis, I'm happy to do this. You now have an idea of what's going to come your way with the Premium Multi-Trader. We've had a good year so far, and the markets look like they are turning up. And also we're getting some hedges so that if we short some stocks, at least we will be hedging our portfolios and protecting them during the transition from moving from lockdown to a new normal of the economic conditions.